Good morning. For today's video call, I will comment the recovery of European indices, which is obviously quite strong and highly correlated to the recovery of the US dollar. So this is something we will see. I will show you a couple of charts and also what I think about the recovery of the US dollar. Then we will make a technical update on the S&P 500, which remains very weak, especially relative to European stock markets, and also of the MSCI World ex-USA in US dollar, and also I will end with this index in euro. So if we start with a chart showing the correlation between the Euro Stock 50 and the dollar against euro, as you can see, there is a high correlation since the end of last year, showing that the strong recovery we are seeing on the Euro Stock 50 right now is highly correlated to the recovery of the US dollar against the euro. So you can see the dollar against euro, which is the blue line, which is obviously a strong support in the short term, which has been a strong support since late March for European stock markets. If I switch to the chart of the euro dollar, as you can see, there was a significant trend reversal for the euro against dollar in April. So at the end of April, a significant technical breakdown below an important support at 122. The euro dollar is making a pullback around its rising 200-day moving average right now and is becoming oversold. So as you can see, the 14-day RSI is reaching its lowest level since late 2016. So strongly oversold conditions, a breakdown below important technical supports. In the short term, I would favor a technical bounce after the recent decline of the euro dollar. But I mean, given significantly oversold conditions and a drop below important technical supports, all we can expect from here is a technical bounce, but not really a move back to 125. So high probability of a technical bounce, which shows that the Euro Stock 50 could become a bit toppish after its recent technical bounce in the short term. This is a chart of the Euro Stock 50. So you can see the strong recovery of the Euro Stock 50 right now, which continues since a couple of weeks. But overall, it remains a pretty difficult chart to analyze because of the whipsaws we have seen since last summer. So it's difficult, although the Euro Stock 50 is recovering quite strongly, to turn back to a bullish stance in the medium term. So it's I still consider the current recovery as only a short-term technical bounce within a complex trading range. Last point is the bearish crossover we recently saw between the 50 and the 200-day moving average is still valid. So still no sign of a bullish crossover between the 50 and the 200-day moving average, which is called a golden cross. So it shows that the big picture of Euro Stock 50 remains quite complex. Another chart I wanted to show you on the US dollar. This is the dollar against Japanese yen. So a strong recovery of the dollar yen over the last few weeks, even more than a month. It was the first exchange rate to turn positive. And what we can see right now is that the trading target at 110, around 110, which is the 200-day moving average, has now been reached. Even the dollar yen, which was my favorite play to play a short-term recovery of the US dollar, is now close to an important resistance zone between 110 and 112. So even the US dollar against Japanese yen has not yet turned outright bullish. So once again, you can see that dollar against yen is becoming a bit overbought. Now if we complete the overview of stock markets with a chart of the S&P 500, so unlike European stock markets, the S&P 500 remains under pressure, suffering from the recovery of the US dollar, obviously, and back once again on its 200-day moving average. So you can see here very strong support level. We saw bulls buying the dips around this level yesterday evening, like they did in February and April. However, although we are seeing a technical bounce from this support level, I wouldn't play a strong recovery at this stage. So the big picture of the S&P remains relatively weak, with risk of extending the correction to 2470. Last chart I wanted to discuss is the MSCI World ex-USA. So this is a chart in US dollar. So you can see no strong recovery when we look at World ex-USA in US dollar. And a mixed chart like the one we see on the S&P with an initial correction, then a trading range with no certainty about the short-term outcome. If we look at the same chart in euro, so as you can see here, a strong recovery like the one we saw in Europe due to the currency move, but like on the Euro Stoxx 50, it's not yet a very bullish chart. It's a very complex trading range since last summer. So it's still difficult to expect a strong and sustained recovery, especially close to this important resistance zone.